Welcome to the Whitwam Wealth Real Estate Podcast. Today's episode is Real Estate Investing Climate.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam, and today we'll be talking about real estate investing climate. One of the things that I do want to talk about is about the economy, because I know the economy is front of mind for a lot of real estate investors. The economy drives pretty much everything that we do, as we saw in 2023 and 2024 as a real estate industry as a whole all across the country. When the economy was down, real estate was down. I mean, we were still selling properties. We were still selling on the retail side through the real estate brokers. We were still selling real estate properties on the investing side. It's just they weren't moving near as fast. Our days on market were a lot higher, which meant our carrying costs were a lot higher. There were a lot less buyers. They had more options, so the offers weren't as good as they had been. So the economy drives a lot of things. And, you know, it doesn't matter who is in government, you're going to have some kind of economic effects from their policies that drive the real estate industry. And we all get to feel those. We all, I guess, kind of suffer from those a little bit, if you will. And one of the things right now that has been kind of put a little bit of an unknown into our economic status is President Trump's tariffs. Now, I think that his plan is a very good plan. It's bold. It's something that nobody has done before. I listened to some of the top financial experts tell me why tariffs are so bad, and I believe that really in free trade. I think in a free trade environment where America has the ability to trade on the world stage, that America wins. I think we win in technology. I think we live in deliverables. I think we win in all of these type of areas. The problem is the rest of the world uses tariffs as a way to keep our products out of their country, make them much more expensive, put blockades for ours, where we have in general kept tariffs pretty low and allowed other economies to be able to sell into our marketplace. And President Trump basically said, hey, look, this isn't working. Negotiating tariffs and getting 1 or 2% isn't working. We're losing billions of dollars as a country in these tariff, whether you want to call it a war or whatever you want to call it, these tariff blockades. He said, I've seen how other politicians do it, right? They all do it this way. They all think it needs to be done this way. Well, one of the things I will say about President Trump is he believes in just completely blowing things up, turning them upside down, and just saying, hey, let's start over. Let's do what nobody else is willing to do. And so that's how he went about negotiating tariffs. He just said, hey, we're not going to play this game. We're not going to allow America to get ripped off like it was before. And this isn't going to come through negotiating trade deals. He tried that. I mean, think about the UK deal. He tried to negotiate that in his first term and didn't get it done. When the next administration came in, they just abandoned it. And so now, 10 years later, we still had no trade deal with the EU. And then China, he negotiated deals with China, and then they were never in the impact of those were never enforced by the next administration, and China basically ignored them anyways. And I was listening to Kevin O'Leary the other day, and he was talking about the fact that he is in China with many of his manufacturing facilities. He's got millions and millions of dollars invested over there, and that he thinks that we need to hold China accountable. China steals intellectual property. They completely make it impossible to do business over there. So, for instance, you take something over there, you start manufacturing it, they rip it off, they duplicate it, and they sell it way cheaper than you can. And so one of the things that tariffs helps do is it helps to open up markets. It gives you a free space in there, but it can also be used as a hammer for equal playing field. So for instance, intellectual property, you invent something, you invent the greatest little widget in the world, and you say, well, I'm going to sell this widget for $1, and therefore the manufacturing cost has to be low. I can go to Vietnam, I can go to Mexico, I can go to, one of the African countries and probably have this thing built. But if I go to China, they've got the infrastructure, they can build it for me, they can meet the cost of the item. And so you say, okay, I'm going to go to China and have this built, and you go over there and they rip off your intellectual property, the idea that you built, and they start building the exact same thing and selling it around the world in competition to you at a much lower price than you can sell it. And that's not a level playing field. So tariffs can be used in order to force a country that wants to sell into our country, and we're a huge marketplace for China. If they want to sell into to our country, then they've got to play by the international patent and trademark rules and not rip off the intellectual property of our country. And they've got to become a fair and equal trading partner. So tariffs can do that. I can see that. I know many business people that can see that. And if you look at what it's done, and you can actually go back to the 1890s and look at William McKinley's presidency when he used tariffs to generate tax revenue. Yeah, tariffs are a tax. But I think what Donald Trump wants to get to is no tariffs, but he wants to use, or very low tariffs, but he wants to use tariffs as the sledgehammer to create fair competition around the world. We've already seen the UK make a deal. We've got many other countries that shall be announced soon. We see that there's a potential deal on China, that tariffs have already been dropped substantially on China. They're not near where they will be, I think, once all these other issues get hammered out. And there's, another probably 17 to 20 countries that are ready to make a deal, the specifics of which haven't been announced yet. All of this is going to lead to better consumer pricing. There's going to lead to better consumer confidence. It's going to be more trade, so there'll be more jobs. There's going to be a lot of things that come out of this. And I guess probably the one thing I'm really kind of, disgruntled with or tired of hearing about is how tariffs, because they're a tax, they're going to raise prices on the American people. Where were these same people when under Joe Biden's Bidenomics, I saw prices on average in my area go up 30%. We had one construction job that we were doing, and between the time that we bid it and the time the job had started, prices had already gone up over 10%. Once we got the job started, between the time the job started and the job ended, prices were up another 5 to 8%. And it was wiping out all of the profit of the project that we had bid. And I didn't hear many people. People kept saying, well, no, Bidenomics is working. The economy's great. You could hear, but the fact is we had incredible inflation with that economic plan from the administration. So I'm willing to endure a little bit of pain in order to fix the problem with tariffs. Okay, that's my point. That's point one. Number two, the economy. A lot of the economy is driven by taxes. When taxes go up, you get less of something. In fact, every time there's been a price decrease, revenues to the Treasury go up. Well, right now, Congress is negotiating a tax bill that the president's team has put forward, which will make permanent the tax cuts from President Trump's first term. They say that if that doesn't get done, it'll be a $4 trillion tax increase on the American people. That's just going to slow the economy down. There's a proposal for no tax on tips. There's a couple of these things that are absolutely economically stimulating that are sitting in that tax bill. And so taxes play a big part in what we do, whether it's death taxes with the estate tax. If you built a business up, who's going to get the money? Are your heirs going to get the money, or is the government going to be in there grabbing hold of a good portion of your estate. Taxes for people when they get a paycheck. Are those going up? Or are those going down? Are we going to see people have more money in their pockets so that they have more money to spend to help drive and spur the economy? All of these things are important. I mean, we're seeing already lower oil prices. In fact, as oil prices got so low here not long ago, last week, 2 weeks, that if they're that low, it's hard for the U.S. to produce and make oil available in our own country. It's cheaper to buy it than it is here. But oil has come down to a stable place where we're going to start to see a whole lot more, of the energy policy or the energy available from fossil fuels start to drive some of this. So what'll happen? More people will have jobs. More people will be paying taxes. More people will be funding the government. And then you bring in DOGE, right? And their tax cuts. And what we need Congress to codify these things, get rid of some of this waste that's been going on in our economy. It's egregious. It's money coming out of our pockets. It's causing us to have to pay higher taxes, and it needs to stop. And that will help to spur the economy for us real estate investors. What are the other things that is a hindrance to us as real estate investors is high unemployment. It's really interesting because I was looking at some of and that's what I've got here. I was looking at some of the job report numbers. And first off, the unemployment rate is the wrong number to be looking at, because the unemployment rate only talks about people who are still in the system, who haven't given up, who haven't decided to go do something, haven't started businesses. So the unemployment rate really isn't a good judge. But there is another number out there, I think, that is a very good judge of where we are at with employment. Why is employment impossible? If somebody's not employed, they can't buy your flip house. If somebody's not employed, they can't pay the rent on your rental house. You can have a 50 unit apartment. If you don't have people to fill that because they're working and have jobs, you're not going to get the rent paid. So I think really what we need to look at is this thing called the labor participation rate. And I think the labor participation rate speaks more about where we are in the economy. And so I was looking at the chart for the labor participation rate. I'm sure you won't be able to see it on the screen, but just real quick. Right now, the labor participation rate sits at 62.6%. Its highest point was in the 63 area at the end of Trump's first term. Labor participation has been on a steady incline. The unemployment rate's still sitting at about 4.3%, which is a little bit up, but labor participation's up. So how can unemployment be up and labor participation be up? Well, there's this thing called secured borders. And so what's happened is under the 4 years of the previous administration, we had a lot of non-U.S. born people who were counted in the employment statistics. In fact, as much of the hiring under the previous 4 years were non-U.S. citizens and government employees. Now, obviously, through DOGE, a lot of the government employees in the federal government in Washington, D.C. are being let go, and that's affected the unemployment numbers a little bit. And the crackdown on illegal immigration and illegal immigration employment has caused a lot of those people to leave the marketplace. And so we're seeing employment numbers up. But why are we seeing stronger labor participation rate? Because U.S.-born American citizens are now filling jobs that had become available because people who weren't citizens have left them, and they're backfilling them. The number of job openings has decreased by almost 1 million. I mean, that's incredible. So who's filling these jobs? Labor participation's going up. People who were saying they couldn't find work. Citizens who were saying that they couldn't find work. So I'm telling you that the jobs are going to help spur this economy. Obviously, people working and having money, they're now going to have money to qualify for mortgages. They're going to have the ability to buy the flip homes that you're buying, to buy the wholesale properties that get sold to an investor who puts it on the market to sell. They're going to be able to buy these. They're going to be able to rent the homes. They're going to have the money to rent the homes that you as investors buy. They're going to be able to rent the apartments that you as an investor are buying and looking to maximize the occupancy rate when the job numbers go up. So as real estate investors, the economy is a very strong thing, and I think we're starting to see the signs of it. The thing that is missing right now, I think, is laying in the lap of the Federal Reserve and Jerome Powell. I mean, if you've been watching this podcast very long and you've heard some of my things, I am not enthralled with Jerome Powell. I cannot wait till his term ends. The reason is he and Janet Yellen were the ones who brought on all of the inflation for the 4 years of the Biden policies and acted too late, acted too slowly, and I think operated in a way to try to get President Biden reelected by cutting interest rates by a point going into an election. Well, now we're starting to see the whole economy turn around. We're starting to see all this investment. I think there's over $5 trillion of committed investment to the United States from foreign countries bringing manufacturing here to the United States, which is going to also help with the economy. We're at a place where the Fed could have cut easily 1/8 of a point this last meeting, but the last two meetings, they've refused to move on interest rates, saying that they don't know the effect of that tariffs are going to have on inflation. In my opinion, this is just my opinion, I think it's completely politically motivated. Jerome Powell needs to go. He was the wrong guy when President Trump appointed him in the first term, the end of his first term. Janet Yellen was horrible. Those two teamed up and got us where we are. The only reason he has not been pulling back interest rates, I think, are political. He and President Trump are at odds with each other. If we can get the base rate down for businesses, that will give them the money they need to be able to borrow at a reasonable rate to start building these manufacturing facilities, which will enhance employment. It will also help to bring the mortgage markets down. The bond rates have been down and up, really because I think the instability that the Fed has brought into the marketplace. The stock market has been very strong, even though they were complaining about these tariffs and how it hurt in April. All of those have recovered by the first part of May, and I think it's strong. If we're in time for another Fed rate cut. See, if they would have started sooner and slower, this is the same problem we had with Jerome Powell with the 4 years under Joe Biden and their economic policies. He waited really a long time, was very slow. They kept talking about inflation being transitory, and then they boomed interest rates really fast. If he had started much slower, not only, we'll say at the end of March or the first part of April and cut 1/8 of a point, and then cut another 1/8 of a point at the end of April or the first part of May, he would slowly be bringing interest rates down. But I have a feeling what's going to happen, we're going to get to June, and either he's going to say, no, I don't want to help this economy, or he's going to take a cut that's probably bigger than what it should be. And, and that's going to create some, again, uncertainty. He could have gone with a much slower path. So the Fed is harming, I think, consumer confidence. I think they could have done a lot to bring back a lot of confidence. We saw great consumer confidence through the end of March. We've seen it wane a little bit, but it's starting to grow again. And again, the Federal Reserve could jump in. All right, here's my final point, my final thoughts on the matter. I think that the economy is going in the right direction. I think that tariffs are going in the right direction. I think the manufacturing is going in the right direction. I think that employment is going in the right direction with the employment rate. I think the only thing right now that's holding us up are interest rates. If we get interest rates, if the bond market, we can get interest rates so that mortgage rate interests are in the 5s and that business interest rates are in the low 5s, so that helps to bring back job growth, business development, manufacturing, and gives people the ability now to afford home purchasing, we're going to see the economy explode. And I think that as real estate investors, that in this climate that we're in right now, it's a good opportunity to continue to look and take advantage of investing now, acquiring now for what's about to come. I know that it's coming. It's taken a little bit longer than I'd hoped, but again, there's some headwinds in our own system, I think, that are slowing it up. But I think that we're going to see a very good fourth quarter and probably going into 2026. The National Association of Realtors still seem really positive on an end of 2025, 2026 real estate sales increase. And I think that we're getting there even in this climate, because I think the climate is getting much better. Hey, thanks for joining me on this episode of the Whitwam Wealth Real Estate Podcast. I invite you to subscribe today and be part of our growing community. And be sure to check out the growing list of our previous episodes on other real estate investing topics. You can always find the Whitwam Wealth Real Estate Podcast on Spotify, iHeart Podcast, YouTube, Apple Podcast, or wherever you enjoy listening to your podcasts. This is Scott Whitwam. Be sure to join me on the next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.